Okay, I think we're live. Hello, everybody. This is Joe DiChiara, the founder of Bedrock Business Builders, Bedrock University, and this group. And I'm just going to try to log in here. And yes, we are live. Everybody, this is Joe DiChiara. And now you can actually, post comments and stuff in the chat box here. And I have a link to the 5-day challenge, which is coming up on February 17th. And this is actually a bonus training for that challenge. And we're going to be doing the challenge every day for 5 days straight, right here. We're going to be doing it live. And we are 9 days away now. And all of the trainings, all of the bonus trainings before the challenge, we're going to cover all of the details that we're going to go over in the challenge. So it's really important that if you're going to be in the challenge, that you keep up with all of these different trainings. And I'm going to be giving you a lot of worksheets and articles and stuff that will take you through the challenge. And what the challenge is, let me explain what it is. It is a 5-day training where I am going to take attendees through the life cycle of a small business. Now, when I say small, I mean really small. The life cycle of a solopreneur. And I'm going to show everybody, where the points are, where people get off track, what they need to do to stay on track, all the way through the systems, the marketing, the production, and the administrative systems that you got to put in place, all the way through preparing your financial reports and your tax returns. And there's a lot of stuff in between. And that's why I'm starting now, 9 days before the challenge, because there's a lot of details. And there's too many details to cover in that short a period of time. But if I spread it out over the next 9+ days, it'll be easy to digest and understand all of the different topics that I'll be covering, from Monday through Friday on February 17th through the 22nd. Okay, so let's start. Today, what I'm going to be talking about is how to choose the right legal structure for your business. And to be honest with you, there's only a couple of choices. And it really shouldn't be that difficult to choose the correct type of structure for your business. And let me start this way, because the real question is, the first question is, when does your business actually start? And that's a question that nobody has ever even asked me, because once your business starts, you are come under the umbrella of being self-employed. Okay, you are what they consider a sole proprietor. Now, what do you need to do to start the business? The first thing is you need to have an idea. Okay, you need to say, hey, I want to do this and I want to make money at it. Well, you haven't started a business yet. What you did was you just came up with an idea. I have ideas for businesses every day that, thank God, I don't start. But the point is that as soon as you take action on that idea, you are in business. And that action could be anything, as long as it's business motivated. So your first action can be to hop in your car and go down the Staples and buy copy paper, and maybe a printer, a computer. Well, guess what? That trip is a legal business deduction now. The only question is, how do you record it? Where do you record it? When do you record it? But that's stuff that I do as the bookkeeper and accountant. The point is that to understand when you're actually in business. Because if you don't know that you're in business, that's a problem. And if you do know that you're in business, you should know that you have certain responsibilities. And one of those responsibilities is keeping books and records. And I'm going to go through that in another training, because books and records are another misunderstood term, what they are, what they're used for, and why they're important. But so now, once you realize that you are in business, you are automatically classified as a sole proprietor. You don't have a choice. That's what the law is. And this is a law. You come under the jurisdiction of the IRS and your state and local governments. I mean, everybody wants a piece of somebody that's in business. And unfortunately, being classified as a sole proprietor is the worst way that you can possibly do an operating business. And when I say operating, I'm not talking about passive activities like rental real estate, buying timberland or investing in an oil well. Those are passive activities. And those go into a different category. What I'm talking about is people like me, that I am a solopreneur. I've been a solopreneur for most of my career, and all that means is that I don't have a bunch of employees around. And there's a benefit to doing business that way. But there is no benefit to doing business as a sole proprietor. See, the difference is I am a corporation. I have two corporations. I have an s-corp and a c-corp. And this is where my training really begins, because this is where most people get off track. And I'll tell you how I know that. There's 30 million businesses in the United States. 25 million are still classified as sole proprietors. And that makes absolutely no sense at all. And I'm going to go through the different classifications and the pros and cons of each one, but let me narrow it down for you. So the first classification is being a sole proprietor. Now, a sole proprietor, as a sole proprietor, you have no legal protection. You have no legal protection. And what that means is basically if there's an issue, a legal issue with your business, you're personally liable. With that's not a comfortable position to be in. So you're personally liable, and you have to pay self-employment tax on the full amount of your net profit, which is an adverse characteristic of being a sole proprietor. In other words, you get no tax benefits. That's it. There's no tax benefits, no legal protection. And not only that, sole proprietors are the lowest on the rung as far as business respect. And what I mean by that is when you're a sole proprietor, your social security number is your business. There's no separation. So when you go into a bank for a business loan, they're going to give you a personal business loan, which is tied to your social security number. Now, if you're another type of entity is a corporation. Now, a corporation has its own tax ID number. But before, I don't want to get ahead of myself. Let me, first tell you the different categories. It's sole proprietorship. Then you have a partnership, which is just a sole proprietorship with more than one person. So two people get together, they're doing business, it's a partnership. Another type of entity is, like I said, a corporation. Now, there's two types of corporations, two main types. There's a C-corp, which is what you become when you form a corporation. You're automatically a C-corp. That's a traditional corporation. You can make an election to be classified as an S-corp, and you do that through the IRS. So that's four types of business entities. Now, there's sole proprietor, partnership, C-corp, and S-corp. Not too many. Then now, about 20 years ago, you throw in another classification called an LLC. And there's also an LLP. So an LLC is a limited liability company, and an LLP is a limited liability partnership. And the distinction between that is a partnership is it's for professionals like attorneys and CPAs. You can't be an LLC if you're a professional with a designation like that. You would have to be an LLP. And what the LL means, whether it's an LLC or an LLP, the LL means limited liability, limited legal liability. Your personal assets are now separate from your business assets. Now, the thing is, for tax purposes, you still have the same tax ID number. It's still being reported on your personal income tax return. There are no benefits to being an LLC. There are no tax benefits. LLCs were created for large investors in things like oil wells, timber, I mentioned this, passive activities, real estate. Real estate is on a whole different categories. And what happened was somehow people started creating LLCs to create an operating entity. And what I mean by an operating entity, it could be anything. It could be a landscaping business. It could be a construction company. But believe me when I tell you that being an LLC comes with no tax benefits at all. It's what they call, you become what they call a disregarded entity. So when you form an LLC through your state Secretary of State department, what you're doing is you're creating an entity for legal purposes. And that's it. There's no tax classification. In other words, the IRS says, oh, we're not creating a whole nother set of forms for LLCs. An LLC is going to be what they call default classifications. So if you're a single member of an LLC, you automatically are classified as a sole proprietor. Again, nobody should be classified as a sole proprietor for tax purposes. And I'm going to go through again, each classification's pros and cons. But I just wanted to get the classifications out of the way. The sole proprietor, partnership, which is really just, two or more people that are in business, no legal protection at all. Corporations and s-corps. So that's really two types. And then you got LLCs. There's really only three types of business entities that you can be in. And I'm classifying a partnership and sole proprietorship in the same categories because both of them come with no legal protection and no tax benefits. So let me explain that again. So the legal protection is legal protection. You have none. You get sued by somebody, they're suing you personally. Now, what I want to do, there's a couple of people in the group. Hi, Cynthia, Rob, Rally, thank you for joining. If anybody has any questions, just let me know. And, you can post them here. And I'm going to paste okay, that's the link again for the 5-day challenge. And if anybody that signs up for the challenge from today on is going to get all of the materials. So today, what I'm going to send you is a PDF of business instructions. Okay, it's a little article that I wrote, easy read. It's 8 pages. So, you can look at this. Some people like to read it. Some people like to listen to it, hear it, see it. However you like to learn, I am going to provide that platform for you. And there's going to be a lot of material. So maybe what I would suggest possibly is if you're going to do the challenge and you're going to be serious about it, maybe you want to get a notebook and put all of this stuff in there. Because I could tell you by the end of the challenge, you're going to have a couple of 100 pages at least of content and direction and worksheets and exercises. And I'm going to pour everything on you that I can to give you the tools to get your business on track. So, there's the link. Also, I know Jenny Wright and Haley Gray taught me this. So if you're watching this, give me a hashtag live. And if you're watching the replay, do a hashtag replay. Okay, had a momentary lapse of memory there. So let's get back to there's 3 real choices. And I just explained that, as being a sole proprietor and a partnership, it comes with a couple of other bad characteristics. Besides the fact that you got to pay self-employment tax on your net profit, you have no control over that. Besides the fact that you have no legal protection, one of the worst parts about being a sole proprietor is the fact that sole proprietors get audited about 1,000 times more than corporations. Partnerships and sole proprietors get audited about 1,000 times more than corporations. How do I know this? You're not going to read this anywhere on the internet or in a tax article, because they're not going to tell you the truth. And the truth is that I've been doing this for 35 years, and I've worked directly with thousands of business owners. I've handled hundreds of tax audits. I got a very clear, precise understanding of how the tax system works, because that was my job. For years, all I did was work with the governments, with the IRS, with the state and local authorities on tax audits. I know what generates the notices. I know how to handle them. And guess what? I know where the problems start. And they audit sole proprietors. In 35 years, and now I'm going to talk about tens of thousands of business clients that I have been indirectly involved with. Some of the CPA firms I worked with had, 1,000 clients, and multiply that by 35 years. And we're talking that I've gone through a lot of tax returns. And in that time, I have seen 3 corporations audited, 3. And each one, I could tell you exactly why they got audited. There were red flags all over the place, and rightly so. One client, we had to do a huge amended return, an s-corp return. It was big numbers. And they audited him. And we went through with flying colors because we had good books and records. Another s-corp got audited because his accountant put the wrong accounting method on his tax return. That's what triggered the audit. A stupid little box like that triggered the audit. And the third s-corp that got audited was I believe, an informant. Picked this guy up because he had stuff that he shouldn't have been doing. And yeah, he was a client of mine, but he became an ex-client once I figured out what was going on. So that's 3 tax audits, and we're talking about probably a couple of thousand of individual audits. Now, individual audits aren't always business, but I'd say about 80% of them are. So if you're a sole proprietor, you're filing what they call a Schedule C on your tax return, which means your business and your personal are commingled. And the IRS believes, and this is statistically, that sole proprietors don't keep good books and records. So when they go in and they audit a sole proprietor, they're usually going to find something. And I'll tell you why, because if a sole proprietor is going to a CPA or an enrolled agent or a tax attorney, they're not going to be a sole proprietor for too long. Every CPA firm I worked in, we had very minimal sole proprietors because when they came in, we made them corporations. It was a no-brainer. And to be honest with you, and I'll talk about this during the 5-day challenge, I didn't even realize that 25 million people were sole proprietors. I just assumed that they were small businesses and they were incorporated. And that was only about a year ago. And I came across the statistics because I was doing research for my business, for a marketing campaign, which is basically this. And I said, who has the biggest tax problem out there? And it led me to sole proprietors, and which is the reason why I changed my whole tax accounting business around to work with the smallest of small businesses. So, hello, Frederick. How are you? I remember you. Thanks for joining. So being a sole proprietor is bad. I don't want to spend any more time on that. And so being an LLC, I think I already covered that, because all you're doing, really, being an LLC only covers the legal aspect of being in business. It doesn't cover the tax aspect. Now, people get confused because it is confusing when you can have an LLC be taxed as a corporation. Yeah, because you see, you have a choice when you form an LLC to be taxed as a C-corp, or you can actually elect to be taxed as an s-corp, which is the right way to be structured. So you're going to be an LLC, but taxed as a corporation or an s-corp. That's the right structure. But let me ask you, if you're supposed to be an s-corp for tax purposes, why form an LLC? All you've done is you've created a little bit more paperwork. Now, the government will tell you that running an LLC is less complicated than running a corporation. And they're right. If there's more than one person owning the corporation. It's not rocket science to run a corporation. It's not, folks. And that's the message, really, the core message that I want to bring to the public, that why the heck are 25 million people sole proprietors? And that's where I'm starting this campaign. And to me, this campaign is really about education. This is a free campaign. Yeah, I understand it's marketing and I will get clients from it, but I can get clients a lot of different ways. I built this program around to help the smallest of small businesses because guess what, folks? Sole proprietors don't last. Sole proprietors go out of business. 98% of new businesses fail. And that's another statistic you're not going to read anywhere. But you talk to real entrepreneurs that have been doing this for a while, and they'll agree with me. 98% of new businesses fail. That is a fact. I am in business and I must have failed 30 different times. And I failed for the same reasons that everyone else fails. It was too damn complicated. I was juggling too many dishes. I didn't have the right information. Now, I didn't fail because I wasn't incorporated. I failed because I knew nothing about marketing. And the truth is, up until about 10 years ago, I really knew nothing about running a small business. They didn't teach me a lot of this stuff in college. Most of the stuff they didn't teach me. They taught me how to do a balance sheet and a profit and loss statement. So I hope I'm reaching you. Let me see if there's, yeah, Fred. And so Fred's got a couple of 25 million. Yeah, sole proprietors, LLC. Yeah, an LLC can get taxed as an S-corp or a C-corp, but like I said, you have to make an election. And all you've done is you created another piece of paperwork that you got to file, another thing to keep track of. So, you know, the conclusion, folks, is that there's really only three choices that you can choose from. To me, there's only one choice. But the choices are being going unprotected and overtaxed and over-audited as a sole proprietor. You can get the legal protection of an LLC, but no tax benefits. Or you can get the legal protection and the tremendous tax benefits of being a corporation. And most of the time for a small business owner, it's an S-corp. And that can only be determined at the individual's level. Not everybody should automatically go out and become an S-corp. What I do is you got to look at the current and future tax situation to determine what's the best strategy. And that's what it is. It's really a tax strategy because eventually, whether you're a C Corp, you're going to become an S Corp, and it has to do with how are you making money in the corporation or not. And I'll talk about that again in another Facebook Live. And unless anybody has any other questions, I'm doing this again in Haley Gray's group, the Women's Entrepreneur Network. Some of you might be members from there. And this is a campaign that I'm launching with Haley Gray and Jenny Wright. And they've been tremendous, you know, helping me along, putting this together. And I'm really looking forward to the next couple of weeks because I'm going to be here all the time, just about every day. So get used to seeing me. And, you know, I really am looking forward to this. That's my story. Oh, hold on a second. Fred, we're on a little bit of a time delay. So what you want to talk about marketing? because I'll talk about anything that you guys want to talk about. And also, again, let me mention that I put the link to the 5-day challenge, which is starting on the 17th. And when you join, I will send you this PDF on, choosing your own business structure. Okay. So Fred says thank you. He wanted to know about marketing, but Fred, we will be covering marketing. Believe me, I'm not a marketing expert, but I'm going to show you what you need how to structure your marketing, if that makes sense, because everything is related. Your business, small businesses, it's not just your marketing, it's not just your product or service, and it's not just your accounting. Those are the three main segments of every business. It's all three of them working in tandem. And that's what we're going to be doing. Yes, Cynthia. Yeah, you're going to get all the bonuses. I'm going to make all of these available to you. I'm going to give them to you as we go, because like I said, I don't know if you were here before, but I have probably 200 or 300 pages worth of content, articles, worksheets, and templates and stuff. And if I gave it all to you, at once, you're going to get overwhelmed. And that's really what I'm trying to avoid. I'm trying to show people how to do business without being overwhelmed. There's a lot to business. There's a lot to any business. And even if you're running a hot dog stand in Manhattan, you got to jump through hoops. You need a lawyer and a CPA to open up a hot dog stand in Manhattan. I don't know about you, but I think there's something wrong with that. I understand the Department of Health issues, but it's not just that. They got to get sales tax. I mean, it's endless. And, that's my story. I'm sticking with it. I have to do this again in Haley's group. So if you're in that group, you can hop on there at about 6 o'clock, and I'll be doing this all again. That's my story. Thank you, everyone. Over and out.